Let's go, Harmodik. I've seen your comment. I was really glad to see that you're here waiting for our live streaming. Welcome, everyone. So let's do this. We are live in basically YouTube and Twitter. This is a live streaming for Bank of England and obviously FOMC meeting, rate decision, and press conference tonight. That's why I call it 24 hours of action, because today and early tomorrow we have those two banks reporting, basically announcing their decision. With the very first one, with the former one, which is expected, basically the Fed is expected to keep rates unchanged, while the next one, Bank of England, the latter, let's say, is expected to cut rates. But the question is whether it's gonna be an aggressive one or the 25 points that is widely expected. So let me break down everything. As usual, I need to remind you that this is your session. Feel free to ask anything you want in the comments. I will see it and I will try to reply and analyze the asset that you wish me to analyze, if it's an asset or if it's a question about fundamentals. In general, we are here to help, as I keep saying. So any question that you have, please stick it on the comments below the YouTube streaming or below the Twitter live as well. So we'll be able to see it. Welcome, Sir Snipper. Okay. So, guys, a quick briefing of what happened so far today, okay? Just to everyone to be up to date, let's say, because it's supposed to be. Let me share my screen as well. Perfect. Okay, and then you cannot see the headline. Let me fix that for you. Should be. No. Minimize it. Something doesn't make it easy, right? Let's see if I push it lower. For some reason, you cannot see the entire screen. Okay, I see. It needs to get, okay, now you can see that I'm just sharing the dollar yen in a daily chart, but that's not really much what I'm planning to do right now. What I'm planning to do is just turn back to the dollar. Let's start with the dollar and gold, obviously. Okay. This week we have seen a lot of cautiousness, a lot of sideways movement, muted. It's a bit of obviously a weakness for dollar has been seen this week. Okay, and the reason for that is on the anticipation, obviously, of the Fed tonight. However, as you might already know, okay, what's other than the banks, what's the main and major actually factor that drives the market, especially this year, obviously, is the trade war and tariffs. And this is a month of trade negotiations. So everything that we are getting, any development that we are seeing regarding the trade negotiation between the US and the rest of the world, I would say, is what actually is the main driver for markets. And we have seen, actually, we have witnessed something like that on Friday with NFP, right? So the reaction was a bit muted. Okay, it wasn't the usual volatility that we tend to see during an NFP release, right? The reason is all these uncertainties around trade war, tariffs, negotiations. Okay, the central banks as well, but yeah, it's mainly has to do with the trade negotiations, and that is what was responsible, let's say, for the dollar being weak to steady so far today. Actually, weak for the week for this week so far. Quite steady the last few hours since we're getting closer to the announcement. The announcement is at, if I'm not mistaken, sorry, is it 6 o'clock server time or 8 o'clock server time? I believe it's 8 o'clock server time. So yeah, so as you can see, that's a 1 hour chart in dollar index, US index, okay? And that is a nice short-term descending actually a triangle. Just a triangle is not precisely a descending one. But a lot of consolidation, as you can see, the last 4 hours in a row. And the reason is not, as I repeated several times in this session, in the past 6 minutes, we are just 6 minutes live, is not only the Fed, okay? This sideways move in which we have seen everywhere, basically, not only in dollar, also yen lags today, also stocks are a bit steady as well. Gold as well, okay? So we have a lot of consolidation, and something that is responsible, let's say, on this sideways session so far is the fact that we're still trying, by saying we, I'm referring to all the market participants, in general, the markets. The markets are still trying to, let's say, understand and digest a potential easing of the trade war. Nothing is certain, right? But a potential easing of the trade war between US and China. And why this happened? Because we have seen some headlines overnight helping and giving some, let's say, hope that the two countries might end up with a deal. So the headlines overnight provided, let's say, an environment of de-escalation in the trade war between the two countries, the US and China. I will be more precise. Basically, there is a meeting with China, between Mr. Trump's top officials and China. This is what has been confirmed earlier, actually. It was just an hour ago, if I'm not mistaken. So, yeah, that the top officials from Trump administration and their counterparts will discuss, will meet this week and will discuss a de-escalation of their so far pretty ugly and let's say damaging trade war, because we have seen that the trade war, the tariffs, the tariffs that they have been applied so far had an immediate impact on the economic data globally, not only US and not China only, but we have seen basically slowly some results, negative results on the economic data of each country. So yeah, the fact that they finally agree in a meeting, and they will meet this week, even though if it doesn't end up with a result, okay, the fact that they agree to meet this week is also what has added basically on this steady dollar and pretty steady in general sideways movements that we have seen general in the markets. Okay, so yeah, okay, so this is the let's say the main drivers so far today, along with the anticipation of the decision today, even though it has been the decision tonight, guys, has been already priced in. Okay, is the what is expected for today is that the Fed will not change its policy, will keep interest rates unchanged. The range, actually, the latest range, the current rate is 4.25% to 4.5. So what matters once again is the press conference, okay? But I don't, I'm not quite sure whether we're gonna see, let's say, a press conference that will be a surprise, okay? Because the data don't really help. So obviously, all the attention is on the press conference, Mr. Powell, for indication regarding when they're gonna actually resume their rate cuts. But because of all this uncertainty, Mr. Powell might keep the same, let's say, tone and the repetition of last month's press conference. And in this case, then that could not that will not, this kind of approach will not help the markets take in a direction, and could be in we could see some limited moves, let's say. Okay, so yeah, all the attention remains on the meeting of Trump officials and China, just because, as I said, I want to, okay, I know that I'm analyzing it a lot, but before we jump into the charts, I want to make it clear that the meeting as such doesn't mean a thing. It doesn't mean that they're going to reach to a deal, okay? But the fact that at least they have scheduled a meeting, okay, it signals openness from both parties for trade negotiations. And this is enough for the market to calm down a bit. Okay, so that this is what matters basically. So now let me check your questions, and let's start analyzing our charts. Okay, dollar index, good, and silver. Okay, so far I have a dollar index request and silver and gold request. So I'm going to start with the first come first serve, right? I'm going to start with the and dollar by Steven. So this is the 1 hour chart. Okay, we have a nice triangle, so you know that if you spot a pattern, that could help you to identify any break, and that could help you identify the next move. So any move, any break below and outside the triangle could open the doors further to the downside. And consider that we anyway have in the long term, in the medium term, the overall picture is negative for dollar, right? Let me put back the 4 hour chart or even the daily chart just to see that we have been on the downside for the entire year, right? So this is dollar index the entire year in a daily time frame. So the trend, the overall trend is a downtrend, right? So a breakout. So let me just change this regression channel. It's the standard deviation of this channel because it's way too high. It doesn't satisfy our asset. I think that's not enough either. No, it's quite. I'm gonna just quickly. Let me just. That's much better. This needs to be fixed though as well. But squeeze one. Yeah, much nicer. You see, supports provides a nice support trend line and a nice ceiling as well. So I'm gonna keep that on. You can see momentum remains negative, even though we have seen some short-lived improvement, but MACD remains way below zero. Ignore stochastic because it's my 1 hour indicator in less than 1 hour. Okay, so stick on the fact that we have been in a downtrend the entire year, and the asset remains in this downtrend. So overall trend is negative, something that I keep saying in every single live streaming. So right now, where we stand is obviously for more than a month below the 100 level territory. Okay, so I'm gonna zoom further so you understand that a break lower outside the triangle, and more precisely a move below 99 level on this and today's bottom, I think, no, sorry, my bad, yesterday's bottom could open the doors further to the downside again and back to the, let me just be precise, to, sorry, I'm jumping between daily and 1 hour just to put on the next support levels if we have a break lower anytime either today or within the week. So I'm gonna get back to 1 hour. Okay, here we are, actually back to the 4 hour one just to visualize it. So you see, it's a bit of a more of a sideways. So if I just focus on last week's and this week's performance, is like haven't really retested the ceiling of the channel, but is moving sideways between 99 area. So actually within the 99 area, 99 and 100 level. Okay, so is moving. I'm gonna delete this one. So a resumption, a break lower, and more precisely below 99 level, could turns their attention back to the mid of the channel and even lower. Depends of whether we see big body candles that indicate a lot of momentum and a lot of strength, a lot of selling pressure. Okay, so however, anyone that is intraday trader, guys, focus on your patterns, focus on the on the time frame that you're trading. If that's a 1 hour or less, focus on what you see. So for the 1 hour chart, a break outside and below the triangle could retest the yesterday's bottom, which is our immediate support level. Okay, any surprise and any break above the triangle, of course, with the confirmation, so it's not enough just to see the candle closing above the triangle. You need the following one that that provides another high. This could, sorry, this could retest, let's say, yesterday's swing highs. So let me put my fractals on in order to be easier for all of us to follow and identify, identify the latest swing highs and swing lows. That could be very, very useful for as immediate support and resistance levels. So just really, really quick. I think it's quite straightforward, especially with the fractals. You can use one scale higher as well if you want, no more than one time frame higher or lower to find immediate swing highs and swing lows that you can use as your potential support or resistance level. That was about dollar index. Everything okay? Are you following? Shall we move on to the next asset, or shall I explain it further? By the way, parabolic SAR, because I'm having Heiken Ashes and parabolic SAR in this chart, are below the as you can see, are below the price. So they are kind of a bullish signals, but they're getting really, really close to the candles. That indicates that we might see a swing. So if we see parabolic SAR changing side and coming above the price, this, along with a potential break below our triangle could strengthen the possibilities of of a continuation on the downside. Okay, so all good for dollar index covered. Silver, let's jump to the silver. Here we are. Nice high Kanashi candles again. I'm gonna actually, you know what, I'm gonna use my, sorry, let me just do intraday candlestick pattern first. Okay, and we can also see the Heiken Nashi version as well. So this is the daily chart. Okay, so let me just delete a bit. See, so where we are standing right now. Okay, so in general, silver is not really reacting with the same way as gold. What I mean? I mean that even though it is a precious metal as well, is not really, we cannot see a lot of cash flows due to because it's not a safe haven. Okay, gold is a safe haven. We cannot see a strong correlation between gold and silver. However, it has been seen in rally in general the past 3 years. Okay, we have seen higher highs and higher lows. Also, we have seen basically a rally so far this year as well, and more precisely in January and February, a sharp correction on March, and a shift back higher the last month as well. So, however, in April, basically since the mid-April up to date, we can see that it's consolidating a bit. So from the 8th of April up to date is sideways between 3180 and 3370 level. Okay, it's consolidating. Okay, that's the overall picture for silver. So you can clearly see the range. Let me just get rid of, for now, just the Bollinger, just to have a clear, let's say, um, view. You see, enter the range over here, and since then it's bouncing between these two levels. So any pullback at the high territory indicate a correction. Any rebound away from the bottom trend line implies to a limited rally, let's say. So in general, silver is neutral. It holds a neutral outlook for the time being. Okay, so far in this quarter, let's say, in a monthly basis. Now, intraday, we have seen reverting some gains, some of the gains that we have seen since last week. So look at that. That's the rebound, and is actually reverted approximately near 38 to 40% of the gains that we have seen since Friday. Okay, so MACD, as you can see, it's zero, it's neutral, hasn't really turned negative. RSI though is below 50 since basically since Monday. Okay, and if I add my stochastic, which is the one that is my short-term indicator, we can see that interestingly we are getting some lower highs and lower lows. That's why quite interesting if it was spotted on time. Basically, if someone noticed it since Monday, actually since yesterday 6. Can you see that, guys? Or I'm in the top of it. So we had lower highs, okay, basically the latest lower high along with a bearish cross was seen this morning at 2 o'clock, so Asia time. So that was a nice indication for this pullback. Okay, so we get consecutive lower highs and consecutive bearish crosses as well. The rebound over here ran out of steam already. We can see that. No, you can't see. I'm in the top. Let me just try to change it a bit so you can see what I'm talking about. Come on. Okay, much better. So can you see that the last 2 hours, the fast line of stochastic points lower and is ready to bearishly cross the slow line. That's that is a potential bearish cross that could indicate the further decline at 3260, 3240, or even 32 3240, which is our 61 and 68% Fibonacci level. And you can see that the last hour we have a big decisive bearish candle, obviously coincides with a break of the moving average, the 200 period moving average, and the 38.2 Fibonacci level, and coincides with a potential break of this latest swing low. However, this candle has not closed yet, so we don't have confirmation. That's why I'm going to go a step lower in the 30 minutes chart just to see whether I'm getting any further insights, let's say. So this candle needs just a minute to close. So in a minute, we're going to have confirmation whether it could decline even. It could actually go a few pips lower down to 0.57 or even and it's close, guys. Bearishly close below the 38.2% Fibonacci level, and below. Okay, we ignore the tails and focus on the body of the candles. It also has is the latest low. It's the latest close so far today. But I will need the assistance of my Heiken Ashes today. For this one. Okay, bearishly cross on stochastics. Okay, MACD is negative. Blah blah blah. That's all good. Everything is in line. The moving averages are also pointing lower. Now I'm gonna check, like, further confirmation from my Heiken Ashi, and yes. So yes. Okay. In the Heiken Ashi, we can clearly see. Let me just make it a bit. Okay, let me. Okay. In the Heiken Ashi, you can see that also parabolic SAR are on the top, adding to these bearish signals. Okay, there was a bit of a consolidation indeed, but let's zoom in the 30 minutes chart. Okay, so yeah, you can see that it seems that there is an increasing selling pressure. Parabolic SAR are negative. Sorry, and so everything points to a short-term, let's say, decline. Now, what else about silver? You notice it this morning? You mean the silver thing, Leslie, or you're referring to the? Yeah. I think you notice it. You're meaning to stochastics, I guess, right? Stochastics, or So let's jump into the so obviously, as I said, immediate support and resistance levels could be seen at the 50 and 60 1% Fibonacci level. For the next in the very short term intraday picture, 1 hour and 30 minutes chart, and in the long term or in the medium term, actually, uh, we can see, guys. Let me just okay. This is the daily chart. It was very interesting for me. Okay, the fact that the asset, I'm referring to silver, so I'm gonna delete this. Okay, it used to be in an up channel for January, February, and the majority of March, but we had a significant sell-off in the very last few days of March that end up seeing basically basically since then we have seen silver mostly below the channel. So now this trend line, the reason I'm not getting rid of this channel is because this line acts as other than a ceiling, okay, a reminder that we could actually um, potentially confirm the beginning of an overall downtrend. However, this is too early to tell. For the time being, it's outside the channel. We had a pullback. Currently, trying to retest once again the this trend line, this ceiling. So this is very important to keep an eye on in general every day or every week at least, because a move above, actually a move into the channel, okay, and more precisely, if it sustains, if he enters the channel and sustains a move within the channel, that could turn the silver outlook back into to a positive outlook. Currently is neutral. Okay, you've seen that this entrance lasted just for a day and quickly faded. So we don't want any failed, let's say, um, signals. We need confirmation. So if you see something like that again, you need to wait and be patient for further confirmation and further consecutive candles that could indicate that silver is back into a positive outlook. But I mentioned I covered actually in depth silver, I think. So let's get back to the gold, because I know that the majority of you really like gold and you want to trade gold, or your it's part of your daily routine, let's say. But unfortunately, today is a bit steady, not a bit, actually, it's consolidating the entire week. Okay, very clear range between pivot point and the first resistance of the day, basically between 3360 and 3400s level. Very important level, key level, round number, right? And a break above 34 could open the doors to yesterday's highs or even to a new record high. Okay, so very important. Sideways so far, consolidation. You can see really doji candles, flat MACD, a bit of a bearish pressure is seen from stochastic, but is not in line with our candles, so it's not enough. So a lot of consolidation, as I was saying. And why is that? Because we have factors that are positive for gold and factors that are negative for gold. Obviously, the so far uncertainty, trade war, tariff threats, etc., were positive for gold, because it's a safe haven. So the market participants were turning to the safety of gold, and that's a positive thing. Also, but in the short term, a factor that also supported gold this week is gold purchases, more precisely from China. After the holidays, China expanded its purchases, its gold reserves, okay? And basically, this is the 6th month in a row, if I'm not mistaken. Yes, 6 months in a row. And that's another reason that why we've seen a support, a floor on gold. Why, guys? Because all these, let's say, the easing, the fact that we are seeing the US and China booking, let's say, meeting, it should be a negative factor for gold. But even though we have seen some positive news from the trade negotiations, however, this was not enough for a gold sell-off because we had the Chinese expanding their gold reserves, and that provided support on gold. Okay, so the positive development on trade negotiation is negative for gold, but on the other side, we have so far ongoing uncertainty and the Chinese purchases supporting the gold. Okay, so this is how we can very, very simplify the whole situation with gold. Okay, in general, if we just zoom out and see the daily chart, it has been in a rally. I'm not gonna say for the past 4 or 5 years. I'm gonna just focus on this year's performance, which has been represented by my trend lines. That was my initial trend line at the beginning of the year, and then I had to adjust it, and that's my second one. But I kept both because this provides me immediate support. Some support levels. You can see that, for example, in April, this initial trend line acted as a support level and is where we've seen a rebound again and a move back to record highs. Currently, let me zoom in. For a second day in a row, we are on the upside, flirting with 34 hundreds and flirting with a retest of the latest record high. Positive momentum. You see the overall picture is positive. We have this pullback, but that seems to be just a correction of a really overbought asset. It was the end of the month as well, so market participants were locking some profits, repositioning as well for the new month, and that's why that was just a correction before another attempt to the upside. Now, gold in intraday is steady, guys. So use the top and the bottom of this range to, as we are immediate support and resistance levels. So any break below 33.60 with a nice decisive bearish candle, that could open the doors to the first support of the second support of the day, which is down to 3300s level, while a move and a closure above 3400s will be very, very important because it could basically it indicates a return back to not only weeks high but also back to April's high, which basically the last record high for gold. Okay, so very, very important to keep put some alerts just to get a notification if one of those levels it's been triggered. Next, guys, any assets you want me to cover, to analyze? If not, I'm gonna move on. I'm gonna return back to what's expected today from the Fed in order for you to be well prepared. Okay. But yeah, it's all about obviously Fed today and trade negotiations. We might see further trade negotiation headlines, related headlines today. So definitely you need to keep an eye on the news. Okay. What else? What else? As I said, Fed is expected to keep rates unchanged today. However, is very, very crucial to focus on the press conference and Mr. Powell. Okay. Um, um, we need to keep an eye whether he is gonna repeat what he said last time, or whether he's gonna take a different approach, whether his comments will be a bit more dovish than expected or hawkish. Who knows? So yeah, this is the focus. Um, because you understand any indication for further delays, so where you should focus, any indication for further delays on rate cuts, okay, that could be interpreted as a hawkish statement. Okay, so that could support a bit dollar. But any confirmation from him that yes, this might be the last time that we are keeping rates unchanged or something like that. I don't know. But anything that indicates that the rate cuts will be considered earlier than what is actually expected so far today. This could be a really dovish guidance. It could add further weakness on the dollar. Okay, so very, very important to keep an eye on the comments. What else I wanted to say about Fed? So I have some questions actually. So yes, dear, Teboho. Okay, cannot really advise. Oh, wait a minute. When do I have to buy or sell? Are you referring to regarding the Fed today, tonight? Obviously, you need to prepare, guys, for tonight's session. Scan your charts, okay? Find your support and resistance levels for the assets that interested you. Put support and resistance levels, put some alerts, and do all your homework actually ahead of tonight's meeting and press conference. Okay, obviously that depends on what kind of a trader you are, but if you are an intraday trader, okay, then you need to be well prepared for tonight. Okay, some support and resistance levels that could trigger um, that could trigger basically a bearish or a bullish move for the asset that you want. So I cannot really advise you what when you have to buy or sell. It depends. It depends what kind of a trader you are. It depends what kind of time frame you trade, what kind of a strategy you follow. So that's a bit that's a very, very general question I cannot reply. But what I can say is that a dovish tone tonight theoretically should weaken further the dollar. However, a hawkish tone tonight, it could help a bit the dollar. Okay. What else? Let me see the rest of the questions that we have. Um, By the way, no one asked about Bitcoin. It was a bit on the upside today, actually significantly on the upside today, especially during the Asia session. So Bitcoin is in general is up by more than 2% so far today, and it has been so far a very strong a month. Not on- I mean I'm referring to April and so far in May, but yeah, it's a bit that in order to suggest that it could continue to the upside, we need to see basically another higher high, and more precisely a closure above 98 level, 98,000 level. But in general, intraday, it has been, it was up. It was up. Uh, 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 Overnight, more precisely, this buy has been seen overnight, a bit of a reversal, slight reversal into the European session, but and yeah, but currently a bit steady, but holding the gains that we have seen yesterday. Obviously, it's very interesting actually. Is it fading? That's quite interesting to keep an eye on again, because parabolic SAR the last hour changed direction. MACD flatten, and we have a bearish cross in stochastics. If you can see over here, that's intraday analysis, guys. Okay, I'm gonna turn down to the 30 minute chart just to see whether I have anything further. Nothing steady. That's not mixed signals, basically mixed signals. So keep an eye on it. Okay. Um, yeah, keep an eye on it. Basically, something that could, sorry, yeah, intraday, guys, in order to suggest that the Bitcoin will return back to 93 territory, 94 territory, we need to see this floor, basically a move below 96 230 level. Okay, this is the support that we have seen during the Asia session. It has been a swing low back in on Friday. Okay. Nonetheless, let me see with your questions. No one asked about stocks. What time? What do you mean? What time? About what, dear? Be more precise. I'll wait a bit. What time? About what exactly? Let me know as soon as possible, please. Before I changed my slide. This is Bitcoin, by the way, not slide. The platform. You see the asset. What time? About what exactly? Pa, 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 pa. We have some news from EU that I haven't mentioned, but I'm gonna wait a bit for Jay to reply what you mean by what time before I analyze EU, euro dollar more precisely, and dollar yen and dollar Swiss. I have requests from three uh, different people. Okay, I'm gonna get back to you, Jay, as soon as I have feedback from you. So I'm getting back to Dream, Life, and Style. That's a nice logo. So EU, yeah, we had actually significant, in general, due to the dollar weakness, we have seen other major currencies benefiting, especially antipodeans ones, euro, dollar, pound, dollar, dollar, yen. Why not? But Swiss has been one of the biggest gainer the entire year because it's a safe asset as well. But now let's jump into the euro. Okay, so today, basically, the main driver of euro dollar, guys. So if I just need to, if I put the daily chart on, okay, just to start from a very from the overall outlook. I know it's a bit messy. Just give me a second. So we have been in a rally, right? The rally started in January. And indeed, based on the Fibonacci extension of it, you can see that our asset has managed to move to reach basically 161.8 Fibonacci expansion and is consolidating between 130, 50 and 115 territory since the beginning of April. Now, so it's a clear uptrend, right? This is a clear uptrend the entire year. So dollar is gaining. So basically, euro is gaining ground against a weak dollar, even though based on the fact that ECB has also established an easing policy, which theoretically is negative for euro. However, because dollar is weaker than the euro, that's why we have seen that euro against dollar is gaining some ground. So it's not that we have a strong euro. It's basically the fact that dollar is weaker than euro. Okay? Now, okay, so that's an uptrend so far this year. Higher highs so far from MACD, but let's wait and see. Now let's basically, let me just get rid of these old lines. So this is the 4-hour chart on euro, and we have over here, say, an immediate ceiling over here, 1 2 3 4 5, and a higher ceiling, let's say at the latest record, at the latest highs. Okay, is it busy? No. So that provides you an immediate support and two resistance levels. 4-hour chart, flat MACD, okay, and obviously euro dollar is ranging since last week, basically the last 3 weeks in a row. So we are in a range market. I'm gonna zoom in further to the 1-hour chart, okay, and what we have seen is basically, okay, it's very muted, general, but same story, different asset, I will say, guys. Same story, different asset. A lot of consolidation. So unfortunately, there is nothing interesting for the time being, other than that you need to do some homework and set some immediate support and resistance levels in order to get notified as soon as the asset is outside the range. Okay, so so you see doji candles. There is, let me just check something. So there is, let's say, a bit of a, just okay. Let me just set this up. Sorry, just a second. It doesn't really, okay. And basically, that satisfies it much better. Let me, so that looks like a short term, just that's for the sake of 1 hour or 30 minutes charts. Okay, here it is. Okay, much better. So we have some kind of an ascending triangle being developed since yesterday night up to date, so that could help scalpers and in general very very short term traders. So you understand that they move outside the descending the ascending triangle could retest the 130 1324 territory, or a break of this 113.77 level could basically bring back to the attention the 114 or even 114.26 level. So yeah, hopefully this helped you guys a bit. But now it's just consolidating. Parabolics are not right. Okay, now they are bearish, but that's not enough because MACD is flat. We are getting mixed signals from stochastics. So not really mixed signals. Okay, so rely on your price action and pattern and your support resistance level, because the indicators right now provide mixed signals. So you need to be a bit patient also for euro dollar, I'm afraid. It's until Fed is out of the way and we have a clearer picture. From the one hand, the fact that we are seeing some headlines that are related to EU and US. So basically, we have seen EU. We have some headlines suggesting that EU will propose tariffs on Boeing, a company, if talks with the US fail to have a positive outcome, let's say. But yeah, that didn't really affected, we could say, euro dollar. It could affect the Boeing shares. I'm not quite sure. I haven't checked. I need to keep an eye on. But we have some news from EU. So it's like some, let's say, setting, let's say, trying to reply with tariffs against US. But so far, nothing really important, not because it's EU, but it's because it seems that the US and Chinese negotiations dominate the headlines. So, dollar yen, yes, dollar yen, dollar yen, dollar yen. Bam, bam, bam. Other than dollar yen, you should check also other crosses such as euro yen. Why not pound yen? So dollar yen, this is dollar yen. Okay. I should have more than one. And give me a second, guys, just to double check something. Okay, dollar yen. That's the overall daily picture. Just to show you something, okay, very very quickly. Remember that this is the beginning of the year over here, and we are up to date. And I had said in our previous live streaming, if I'm not mistaken, a Fibonacci expansion from the top to this latest swing and to this latest high, okay? Because why? Because this is very helpful to have some support and resistance levels in the long term, though. Okay, so you see that 139. So on the downside, 139 and 135.60 are basically lines that support levels that I have put based on the basically, I'm going to show you the weekly chart just to understand why I've said it over here. It's over here. Reversal, swing low, swing high. That's why I put this line. It's for the future, to help me in the future if we see a resumption of this downtrend. So it could provide me support levels 139, 135.60, and 131.30. That's in the long term. Now, let's see on the intraday what's going on. Basically, the whole week since Friday, dollar yen has been in a decline, in a bit of a sell-off. Today, however, it's a bit steady, trying basically to is moving in the same range as yesterday. Okay, so I'm gonna zoom in even further. Flat moving average, quite flat Bollingers, flat MACD. A bearish signal is coming from stochastics. RSI is at 50 and pretty flat since yesterday. Not helpful. I'm gonna turn into Heiken Ashis. They might be more helpful than the candlesticks right now. Let's see. And they are. Okay, a bit for short-term traders at least. So this is the 30 minutes chart years for dollar yen. So what we have some higher highs, higher lows. However, we have seen a reversal and consecutive bearish candles. Okay, this is the 30 minutes chart. Okay, this move might last for a few minutes only, or top of the hour. It's 30 minutes chart. It's a very fast environment, remember. So we have a bearish cross, interesting, of over here in the previous session, but the slope of the moving average is not really pointing lower. So this decline might be a limited move. Okay, so okay. Okay, so sorry guys, I'm changing time frames just to analyze it better. So what we are seeing over here, let me just stochastics, put my stochastics on. Okay, is that there is some selling pressure for dollar yen, but in the very, very short time frame. Okay, so this pullback might be might last for a few minutes, let's say. Okay, so you see bearish, yes, bearish Heiken Ashi candles, but they're not really big ones. Okay, indeed bearish cross between my fast moving average, but still they're not like the slope is neutral. Indeed, stochastic had a bearish cross and it points lower. So I'm gonna put the 15 minutes chart, and based on the 15 minutes chart and the stochastics over here, let me just, can you have a look now? Cannot see it, but how can you see it? What shall I do? Can you see that, guys? Can you see that? We have a bullish cross in stochastics over here. So that means that the move might run out of steam already, and we might see a reversal, a rebound over here back to 143.50 level, 43.40. Okay, that's a 15 minutes chart. Okay, it's a really fast environment. Yeah, but yeah, for the 1 hour chart, is like these trend lines could help you identify immediate resistance support level. Very small body candles indicate the lack of direction. Uh, so yeah, that's it. I'm afraid, Jay. Guys, I will cover the very last asset. Jay, I have already covered gold. Mark, I have already covered gold, so don't worry about it. As soon as I close the session, you can drag and drop on your cursor to the very beginning of the live. It will stay as a record, will stay in our YouTube channel, and you can have a look on the gold analysis that we have done earlier, because and nothing changed anyway, so there is no reason to repeat. So let's quickly have a look on Swiss, because it's something that Eduk um, requested and ages ago. My bad. So dollar Swiss, dollar Swiss, dollar Swiss. Where's my dollar Swiss? Oh, sorry for that. Just a second. It's somewhere. I'm sure it's somewhere here. I don't know. I might missed it. Or let me just profiles. Andria. Not here. Not here. Not here. Interesting. Okay, I'm gonna put it back right now. It's quite sure that I had it, but okay, never mind. $2 Swiss. Here we are. So okay, so just to start with, sorry, just a second. Let's put the intraday. Okay, daily chart. First of all, just to see why I mentioned that Swiss is the biggest beneficiary so far from dollar weakness. You can see it over here. Okay, it's back to levels that we haven't seen basically since 2014. 2014. Okay, so nonetheless, though, let's get back to the daily chart. Okay, so consolidating, unfortunately, quite similar with other assets the last 2 weeks, or this week more precisely, bouncing between not 90 82 and not 83 for 35 level. Nice range. Okay, let me zoom into the 4 hour chart. Here it is, crystal clear, bouncing. Zooming further into the 1 hour chart just to see whether we have any feedback. There were some repeated bearish crosses between my fast moving averages, but mixed signals. I'm getting mixed signals from the indicator, so it doesn't provide a clear intraday outlook. Let me change my template. Where is it? And set my fast moving so my 5 and 9 exponential moving average, sorry, so below the pivot point of the day. Okay, however, moving average are getting a bit flat. They started pointing, can you see, they started pointing a bit on the right hand side. Stochastic, though, keeps pointing further on the downside, so but that's a bullish move. Is it running out of steam or run out of steam already? Yes, it did. So we need to wait for this candle to close, for the last 30 minutes candle to close, because we need to confirm whether this decline has faded or run out of steam. Because over here, the stochastic has a bullish cross, okay? And that might be the very, very first prime signal, let's say, for a potential rebound in the next few minutes or the next few hours. Okay, so be very careful. We have a bullish cross over here, but we need to get confirmation from this from our price action. Okay, we need a bullish cross, candle, and also we need we need the price action to be in line with the indicators. I'm gonna very, very quickly put my Heiken ashes as well. So let's see what's over here. So, okay, we have repeated 30 minutes chart again. We have ongoing, let's say, bearish candles, but look at that. The body of the candles get smaller and smaller, and we don't really have, okay, we have consecutive lows. You see? Actually, nothing is clear yet. Sellers are still in control. Sellers are still in control, guys. So, yeah, we need to wait and see for dollar Swiss. So, steady overall, sideways overall. Everything will get clear soon, I think, because we need, basically we're waiting to see whether, can you see in this 1 hour chart that the last 2 hours, 3 hours basically, is retesting the 1, 2, 3, 4 days bottom. So if it extends below it, which means it could break the 0.82 level, which is a round number. If we have a break of the last 4 days bottom, which coincides, as I said, with a move below 0.82 level, then we could see the asset turning further on the downside, okay? And we could basically, we could see it retesting. We could see it basically turning to 181.90, 181.50 as its next support levels. However, if it fails to break this, and this actually is not only 4 days, it's more than 4 days, it's basically more than a week support level. So if it fails to break below it, then we might see a rebound and a return back to 82.50 level. So it's a very interesting, it's at a very interesting territory right now, which it failed to break since 28th of April. Okay, it's a very strong support level intraday. So we might see a reversal, okay? So keep an eye on it. Keep an eye on it. Obviously, parabolic SAR, the bearish candles and the MACD are basically suggesting further selling. But the fact that the last 30 minutes, the body of the candle is doji, small, and there is a tail at the top, right? Plus the fact that our moving averages are started pointing on the left-hand side gives some kind of a fight between buyers and sellers. Okay, so patience once again. You need to see clear breakouts and clear bullish candles. clear indicator signals that they agree to each other. That was pretty much from me, guys, today. I'm gonna call it a day. The live will stay anyway in our social media. So I know that a lot of you want again to see gold. Don't worry, just drag and drop your cursor as soon as I close the session. That was pretty much it for today. Take care. Take care for tonight's session and for anything that's coming out from China and US. Okay. So markets are very, very sensitive. So yeah, keep yourself up to date with the news. Yeah, thank you very much for attending. Have a great day ahead. Take care. And we're gonna see you again next week, if I'm not mistaken, on inflation. Tuesday, actually, Mihalis, my colleague, will have a live streaming for the US inflation. So don't forget to subscribe in order to get alert for our upcoming live streamings. Thank you very much. Have a great day ahead and take care.